Hey, what's up, everybody? Back doing another weekend video. We had a volatile week, and we likely have a very volatile week ahead of us. So we had the gap down last Monday. Looks like tonight again we will be open. I'm just looking at the Nasdaq here. Looks like we're gonna slightly start lower, not as significant as what we saw last week when we got down 2.5%, 3% going into Monday. Monday saw a piercing pattern bullish reversal hammer on ES, on NQ, no follow through. Every candlestick that you watch needs to have follow through. One candlestick does not change or make a pattern. 2, 3 candlesticks, you could start seeing behavior. Confirmation, hey, here we go. So what did we do? Tuesday was indecision. Wednesday was an inside bar. Thursday was a bearish kicker. Friday was another kicker. Now we're coming right back down into support. The market's fragile. We know this. It's very fragile right now. It's really headline sensitivity. Every tweet, every opinion. Monday we saw the reversal because Trump said, oh, this war is going to be over soon. And then the rest of the week was kind of indications that the war was not going to be over soon. So the market didn't like that. What we're watching right now on the weekly chart is we do have an 8-13 EMA cross. Not ideal. We're right at the 21 right now. This is going to need a stick save. Okay, you see the bull cross in here, look at the run. You see the bear cross in here, look at the drop. Bull cross in here, look at the run. Bear drop right over here, look at the drop, right? We're going to need to see the 21 be saved right away. So this week, potential, drop, reversal hammer, or drop, and we're going to escalate down into, if you look at ES on the weekly chart, this zone would make the most sense. 62.5, 62.6, 6,300 coming down into this range. Really, if you look at ES candlesticks, they're a little bit more bearish than what we're seeing right now in crypto. But it's not to say for sure. We still have the support right here. Bearish candlestick showing up on SPX and SPOT, right? All three of them looking bearish. Not good on these weekly charts. EMA crosses on tap. So that's where I would have to be prepared as a trader if the zone does not see a hold right away. If it sees a hold right away, tomorrow, lower open, bulls buying up, which has basically been the case for a lot of Sunday, Monday price action for the past couple of months. Lower opens, reversals on Monday, rest of the week just chop. If we see a hold in here, we could potentially be, that's fine. All we're seeing is zone to zone trading. We have our zone of support. This has not changed. Bears change it, we'll go to our next zone. Our next zone would make sense down in here. That's what I'd be looking for on ES. So very important price action in the next couple of days. If we lose this zone as a bull, my advice is be patient. Do not rush and think, oh, I'm going to miss the bottom. Even if you miss the day that the market sets a bottom, when the bottom is in, the upside is going to be significant. So don't rush. Like, oh, we're dumping. Oh, this next hourly candlestick looks like a reversal hammer. Work is going to have to be done. Also, we're going to have to see the headlines change. If it's a headline that war is over, everyone's agreeing, stuff like that, okay, well, yeah, maybe be more prepared that the bottom is going to be in. NQ, we wicked below where we've had a reversal. Our next zone would take us down to 23.5 and then the previous back test 23.1, last year's April dump. March seasonality typically is a bottom in the market. We didn't see that last March. We bottomed in April. So we could see a very similar situation where we see this escalation. We had the double top and then the drop. We have the double top and then the drop. That could be a potential scenario. If we do see escalation down to the downside, don't be fearful. Don't be, oh my gosh, I missed this opportunity. I gave back too much of my gains. Don't think about anything like that. Think about, great, let's be prepared. Let's be prepared to capitalize on the opportunity that's been given to us. Because every significant drop that we've had, as long as I've been doing videos with you, this is the first one I've started doing videos with you. This is COVID. This is the bear market. This is last year's April. I didn't do last year's April. I was off. Not doing YouTube videos at that time. But you get the point. Every time opportunity is created. So you got to be prepared for that. Looking at BTC, actually, yeah, BTC, the bull case right now would be we target back up into this 84 range. The bear case right now is we're still in a bear flag. There are indications that we're not repeating this pattern because of the price action we saw this week. Price action we saw this week was very different than what we saw in here. Remember, we had our resistance, we broke and we dumped. Over here, we had our resistance, we broke, we came back down into the golden pocket, and we went back up to that high. We didn't go back up to the high over here. But on Friday, we did see a sell-off. It wasn't a great candlestick from the way it was looking in the morning. But you can see the bulls constantly trying to buy it up. You know, the news and everything didn't help. But not a sell-off as of yet. So the bulls, if they can hang out in this range, weaken the zone, then we'll have opportunity to run up into that 84 range. That's what I'd be thinking, somewhere in here. And then the bull pattern to come out of this, we would be thinking, okay, if it's truly going to be a bottom, and we don't know, would be a head and shoulders pattern. Okay, I already have the right shoulder. What we got to be concerned of, if you are overly positioned already into a crypto bottom, is that we do get a move still back into the 45-50 range, which is the golden pocket off of the bear market lows in 2022. So keep that in mind. There is some relative strength. There is some relative strength showing up in crypto, but no behaviors have fully been changed. You can see the weakness from both bulls and bears. Bears unable to push it lower after our bottom candlestick. We basically traded in this range for a month, but you also see weakness from bears being able to get that next move lower. Okay, opportunities to get it lower and haven't been able to. So potential that we could see a reversal here. This looks like a head and shoulders pattern on gold. So keep this in mind. We had a Dartmouth box over here and it broke up over it and then it sold off, couldn't get followed through. You look at that weekly chart right now, it's going to be very important for gold bulls to hold the EMAs. It's back testing right now the 80 EMA again on the weekly chart. Dark cloud cover candlestick, followed by a bearish kicker. An attempt to move higher was sold. This is a short term head and shoulders pattern. Keep this in mind. Right here, there's the neckline falling below. Let's see if this is going to escalate. If it's going to escalate down, we would be looking for this move down into about 48.5. And then there's a little bit more of a demand zone down in that 48 range. That's what I'd be watching on gold. And lastly, I'm going to cover here is oil. Whenever you see a huge run with a candlestick like this, you look for it to be a blow off top or sideways consolidation for a significant period of time. So we got indecision on this weekly. Big run, big drop, big bounce. Whenever I see a big run, a big drop, I'm looking for a big bounce. You got to look for a big bounce. And then the correction. Another correction down. So right in here, that would make sense. And then we see where this correction is going to come. Are they going to hold support at 89, continue to push up? But I would be looking for a top out between 103 and 104 on CL. I hope you enjoyed the video. I'm going to let you guys know we do have our community. If you want to come join market participants, DM me, shoot me an email, hit me up on Instagram. That's the only way to get into the room. All right. Peace out, everybody.